Hello, my dear young viewers. I welcome you back to this session, and this discussion is going to be on the ledger posting. So, I will show you the tricks and techniques and easy methods of how the ledger postings could be done. Also, understand that ledger is the final book of entry in the accounting process. As you finish recording the transactions into the first book, the primary book known as the journal, from the journal, we are going to post the transactions into the ledger. So the method of extracting the journal entries and writing it in the given format into the ledger is what you call it as posting. The method of recording the transactions into the journal is called journalizing. And from the journal, you are going to write these journal entries into the final books of entry, that is your ledger, through posting. And after you finish this posting, also you move into another procedure called as balancing. So today we are going to learn both this posting and the balancing methods. So let us take some examples of a few transactions with their journal entry. Mr. A commenced business with cash. So we will take a journal entry like this. Cash account debit. Let's assume some money over here, rupees 1 lakh, to Mr. A's capital account. So you call it as Mr. A's capital account, 1 lakh. So this is one transaction being business started by Mr. A. Another transaction I would like to take is purchased furniture worth rupees 5,000. So when you buy furniture, furniture comes into the business. So furniture account would be debited. And since it is a cash transaction, cash goes out of the business, cash account has to be credited. So we derive the journal entry, furniture account debited to cash account. Let us take another example, like you have purchased goods worth 10,000 for cash. So here when you are buying the goods, since you are purchasing it, the purchaser's account will be debited. Actually, the goods are coming into the business. So you debit the purchaser's account. And since it is a cash transaction, money goes out of the business. So therefore here it is 10,000 to the credit of cash account. One more transaction I would like you to take is cash sales of these goods. Eliminating the profit, let us imagine that cash sales happens to be there worth rupees 15,000. So for this, we would write the entry as cash account debit 15,000 to sales account. Sales account being the goods sold and the goods are going out of the business, sales account is credited. So let's start our posting procedures using these 4 transactions. Now remember that ledger postings will depend upon one important rule. We use this particular rule as same side with a different account. What is the rule that you may have to go with? Same side with a different account. Let me put it across here. So the rule says that same side with a different account. Now, how do you apply this rule in the ledger posting is the question, right? So here, a particular ledger account for each one of these aspects of debit and credit has to be open. What do I signify is, say here, as you identify the names of the accounts, let us jot down what are the different accounts that needs to be opened over here. See, the first journal entry reads as cash account debit to Mr. A's capital account. Since there are 2 important accounts over here, you will have to go with opening of cash account as well as Mr. A's capital account. Now coming to the second journal entry, furniture is one of the aspects. So you will be opening this furniture account. But repeat of cash account will not be done. Already you have opened, students, the cash account. So there is no need for you to rewrite it. Again, we move on to the purchases account debit to cash account journal entry. Here also we don't repeat cash account, so purchases account. Similarly, in the 4th journal entry, it reads as cash account debit to sales account. So here only sales account is to be prepared. Now you identify that out of 4 transactions, we need to open 5 different ledger accounts. Now ledger account will be in the form of a T table. We call it as a T table because Here we use this English alphabet T to denote this particular table. So that is why we call also this ledger account as our T table. So here the T table will be mirroring the debit sides as well as the credit sides, meaning the debit, the left part of the ledger account will be identified as DR. That is, we call it as debit side. Similarly, the right side would be addressed as credit side. Now, the columns that we open both on the debit side and the credit side will remain the same. Here, whatever the columns that you open to the debit side will be similar to that of your credit side. So when you are opening these columns, remember it is also entered chronologically. You have the date column. Here, unlike in the case of journal where you have opened the ledger folio number, here you may have to open the journal folio number. You have to open the journal folio number. So similar columns will be present even on the credit side. Students, we have the same set of columns that are being posted onto the debit and to the credit side. Now let me show you the ledger posting here across the cash account first. So we begin with cash account. Understand how it is being done. So the columns, do I have to denote over here? The first is date column, then followed by it would be particulars. Here you call it as JF number. JF meaning journal folio number, amount in rupees. The same columns are present on the credit side also. Date, particulars, JF number and amount in rupees. Now we move with the posting. Read the first transaction. It says cash account debit to Mr. A's capital account. Cash account debit to Mr. A's capital account. Now, what is the rule that is applicable over here? Recollect what is the rule I have given you. Same side with a different account. What does this rule signify, students, is, see, you should identify this cash account. Cash account to be under which side? Cash account is given on the debit side. So your posting also should happen on the debit side only. Same side. What does same side signify is your posting will happen on the debit side. Cash account is on the debit side. So your posting also will happen on the debit side. So here I have not taken the date. I have taken the serial number. So I will present it in the form of serial number only. Now remember, while writing, you may have to use the words to and by. Debit side, it would be taken as TO2, and credit side, every time you post the transactions, it would be starting with by. Now here you should not write cash account under cash account. Instead, you are expected to write to Mr. A's capital account. See, what does this signify over here? It says same side with a different account. While posting, you write the name of the other account. You have debit and credit aspects. So cash account is debited. Don't write cash account under cash account. You write the other part of the account. Let's move to the second entry. What does it read for you? Furniture account debit to cash account. This time, students, the cash is on the credit side. It is on the credit side. So you should post this journal entry on the credit side of the cash account. And I have told you that credit side, all the postings begin with BY by. So while writing, you are not expected to write cash. Instead, you will write it as by furniture account. Same side. Side indicates debit or credit over here. But while writing, you are expected to write a different account. Now, take a turn to help me do the third part of the transaction. What does it read? Purchases account debit to cash account. So which side cash account is? It is on the debit side. It is on the credit side. So you are expected to post it on the credit side. So while posting, what will you say? You will write it as by purchases account. You may have to write it as by purchases account. Now let's go to the fourth one. This time, the cash account is on the debit side. So my posting should appear on the debit side of the cash account. And while I write it, I will have to post it as to sales account. So the rule under the ledger posting is same side with a different account. Now this part of how the taking of the transactions from the journal and writing it down into the ledger, it is known as posting. Followed by posting, we also have balancing. The balancing methodology is you may have to take the totals on both the debit side as well as the credit side. Now observe the above cash account. On the debit side, you have two amounts being given, 1 lakh and 15,000. When you total it up, you get 1 lakh 15,000 over here. And on the credit side, there are again two monies being given, 5,000 and 10,000. So together, put together, it is 15,000. So the first step is to take the totals on the debit and the credit side. Now the next step is to find out the difference between the debit total and the credit total. Now you should observe one thing, that either of these sides could be large. That is, sometimes in some accounts, the debit total would be more than the credit and vice versa. Now in this example, you have observed that the debit total is larger to the credit total. Now what you do is, you come to the shorter side of the account. Which side is shorter? The credit side is shorter. Now the date would be generally the last date of the month. Could it be 30th or 31st? It depends upon which month are you dealing with. If it is February, it can be 28 or 29 also. Now on the shorter side of the account, you would post it as by balance carried down. By balance carried down. And you have to place the difference money. The students should make a note of that. It should be the difference money that will be placed as the shorter side of the account. Now, once you finish doing this, the larger part of the money will appear on both the sides. Look at it. On the similar lines on both the sides, we would place the larger part of the total and draw two lines which indicates that we have completed our account. That is, we have closed the ledger account. So what are the steps under balancing? The steps under balancing would be, first, you may have to go with totaling on both the sides, extract the debit total and the credit total, find out the difference money. Once you get the difference money has to be put on the shorter side of the account. The shorter side indicates the side which has a lesser amount. And by placing the difference here, you are expected to close the account by placing the larger totals on both the sides. Now the same amount will be again brought forward. What do you mean by bringing forward here? You are expected to bring forward the monies. That is, whatever by balance carried down that you have written, the same has to be brought forward for the next month. That is, on the 1st of the next month. When you are talking about January, probably this would be 1st of February. Okay. So you would say it as to balance brought down. This time you are using the words brought down, and the same 1 lakh is presented. Now this cash account also should give you a proper idea about how it needs to be interpreted. Once you learn the methodology here, it is also important, students, that you may have to go in for interpreting what is being done under this posting procedure. See, cash account is in the nature of real account. So real account principle is debit what comes in, credit what goes out. Now, if you have observed keenly, all that whatever has gone on to the debit side of the cash account, it will show you the details of the money coming in. Entity concept has to be put under, thinking. You are the business. You are Mr. A's business. So capital is coming into the business, 1 lakh rupees. Also, when you sell goods, 15,000 money is coming into the business. On the other hand, whatever you have credited is the money that is going out of the business. When you buy furniture, furniture comes in, but you may have to pay the money to the outsider. Similarly, when you're purchasing the goods, that money goes out. Now, what does this by balance carry down indicate? It is the balance of money that you have got cash in hand at the end of this period when you have completed this cash account. So you have started with 1 lakh, you received 15,000, you also spent 15,000. Now you are left out with 1 lakh as your cash balance. The same methodology will be followed for each and every nature of account. For instance, if you are preparing the purchaser's account, you may have to go for, say, only one particular posting under purchasers account, because purchasers account here has got only one posting, right? How many times that this purchasers account in this example has come? Only once, the third transaction you observe. So here purchasers account debit to cash account. So on which side you are expected to make the posting is on the debit side. Same side means purchases is on the debit side. So you will also have to post it on the debit side. But while writing, you may have to write it as to cash account. So when you are doing furniture account on the similar manner, here furniture account in the second transaction, again it is debited. So you may also have to post the furniture account onto its debit side. So while writing, what would you say? To cash account 5,000. Now whenever you are balancing this particular ledger account, remember there are no further entries means the credit total is 0. The credit total being 0, here, the debit minus credit, the shorter side will be considered as the credit side. So the same 10,000 will be placed on the credit side by writing it as by balance carried down, which will be again brought forward on the debit side. Here also the same is the case, students. It will be like credit side because no other further entry is there, by balance carried down. So when you say by balance carried down, 5,000 will be entered and the account will be closed. So, but when you are considering the sales account, the posting will be on the credit side. Remember, the posting will happen on the credit side because it says cash account debit to sales account. So since sales is on the credit side, your posting also will appear on the credit side. By cash account, you would say 15,000 and the balance will come on to the debit side. So to balance carried down, it would be 15,000. So hope you would have understood how this ledger posting has to be worked upon. Ledger is the final book of entry, and the way by which the journals are being taken, extracted from the journal book and put into the ledger, it is known as posting. So posting is the first step. Followed by it would be the balancing, and these ledger accounts will be helpful for summarizing the record of the transactions. The major purpose of doing this ledger is to get the summary of the transactions. For instance, in these recording of the transactions, you have observed that you will know what are the total receipts during a particular period. You will also understand how much money has been spent and how much cash in hand is there with you. Similarly, what is the amount of cash purchases that happen to be during a particular period? All these questions could be easily answered through your ledger summaries. So ledger account is mainly useful for the summarizing of the records. So practice this posting and balancing procedure. Take many examples on the journal entries and try to do your own posting and balancing of the accounts. Listen to this once again and see to it that you work out ample examples to master over it. Hope this discussion would have been purposeful to you. Do keep in touch with these lectures to learn more of accounting concepts. Thank you very much.